Well, hello there, everyone. Hopefully, you're doing outstanding. I'm going to give you a real life example here of how to run the numbers on a real house. And I'll give you a little background first, and I'm going to tell you, well, while I'm explaining the background, do this. Find yourself, I want to show you my notes. Find yourself a piece of paper and find yourself a pen or a pencil, okay? Because I'm going to give you real numbers. And I'm not fancy dancy. I don't have a whiteboard behind me, a blackboard. I don't have a special camera to look down on. Nothing, because I'm mazske. I'm mazske finance. I'm living bare bones at the moment. I'm starting to downsize my house because I am going to move. So I'm going to start selling some stuff, cleaning stuff up, getting rid of stuff. So you'll see this behind me for quite a while still. But you may see the clutter back there slowly diminish. But anyway, a real life example is coming to you. So while I'm explaining the background, get that paper and pen, and I'm going to give you exact numbers, okay? So you write them down, and I'm going to teach you how to calculate them. You can use a spreadsheet, but I'm going to tell you how you can do it by hand. It is simple. It is very easy, okay? So, a little background, and before I get started, I'm mazske Finance. Please click the thumbs up and like. Please comment. Please share. Please subscribe. That helps me to grow this channel and get the message out to others. And as always, I am not a financial advisor, I'm not a CPA, and I am not an attorney. Okay, so getting started, a little background first while you're looking for paper and pen. 2-3 years ago, whenever it was, as I was growing my real estate portfolio and I was living in Virginia, my phone rang one day, and it was one of my contacts up in Northwest Indiana. And they called me, and they made me an offer to potentially for me to buy 4 houses. 4 houses. They gave me a little bit of details about all 4. The person who called me had been in all 4, knew a little bit about them. Told me about all 4, told me the prices, told me the situations with all 4. And I looked at him and was like, oh man, I'd love to get all 4, but I can't swing it. I just can't. I don't have the money. I can't do it. So I picked 2 houses, and all 4 were good buys. All 4 were good buys. Okay? So I picked 2 houses. And I called a buddy of mine and asked him would he be interested in the other 2. And he looked at it and decided yes. I told him what 2 I was getting. He was fine with that because all 4 were good deals. One of the 2 I was getting, I had to pay cash for it, and he didn't have that much cash. So I had to get that house, and I picked one of the other houses out of the 4, and he got the other 2. Okay? So it wasn't like I cherry-picked the 2 best, and he cherry-picked the 2 best or whatever. But anyway, 4 houses. Out of his 2 houses, luck of the draw, his 2 houses, and I didn't know this, he didn't know this going into it. The 2 houses he got were from a different seller than the 2 houses that I got. And the seller did a little thing. He had 2 tenants, a tenant in each house for those 2 houses. And they were actually a mother and a daughter in 2 separate houses that he had bought. They were both bad tenants. And I didn't know this ahead of time. Don't think I was trying to scam my buddy or nothing. I didn't know this. Okay, both were bad tenants. As the last couple years went on, one tenant left, and then eventually the other tenant got out. The other tenant just got out recently, like a couple weeks ago, I think. And contractors had been in there to assess it and to come up with an estimate to rehab it. And they did, and it's expensive. So my buddy reached out to me and said, what do you think? If I spend this much money, is this a good deal? And I said, remind me, what did you buy it for? What was it renting for? He told me how much the rehab was. I said, what kind of rent does the property manager expect you to get? And he told me all those numbers. I have run the example. I'm going to explain everything to you, tell you the actual numbers, and I will then show you how to calculate them manually, even though I use a spreadsheet to do it. And then at the end, you decide, is it a good deal? And I will tell you if I think it's a good deal or not. Okay? All right. So what we're going to do is a couple things. First of all, I'll tell you the buy price. He bought this house for $40,000. I paid $40,000 for one of the 4 houses too. The other one I paid cash for $18,000. Okay? So he got one for $40,000. It is very close to one I got. Same street, actually, I think. Yeah, a couple houses away. So he paid $40,000. We'll forget about the past 2 years. He did get some rent in, and whatnot, but we'll forget about it, not count that. We're not going to calculate it, how much rent did he get in and this and that. We're not going to do that. Okay, fast forward to today. He bought it for $40,000. He put a 20% down payment down. He got a mortgage on it. All right, the mortgage is, let me open my spreadsheet up. Since I bought one for the exact same price, I got all the figures here. The mortgage is roughly, because I got my figures are broken down, property and interest, taxes, insurance, 3 different figures. I'm not going to mentally add them together, but roughly it's $280-ish. Okay, roughly. All right, I'll give you the exact actual numbers here in a second, where you can write them down and figure out what that mortgage is to the penny. All right, so anyway, he bought it for $40,000. All right, when he rehabs it, the estimate on the rehab, and normally it comes in, we'll just assume it's going to come in exactly to the penny. The rehab is $17,000. Okay, when he bought it, he put down, where to write it down? Should be approximately $12,820, and he put down when he bought it. So that's how much money he spent going in. Okay, because I have the numbers from when I bought my house at $40,000, so that's what I'm using, $12,820, and that would include the down payment and closing cost. I just did mental math there. It includes down payment, closing costs for when we bought those houses back then, okay? So then his expected rent, if he rehabs this house, is between $1,100 and $1,150. That's what they'll try for. And we'll assume that they'll get the lower number, $1,100, okay? So what we do, we say all in, he bought it for $57,000, roughly, right? But all in on his cash that he has spent or will spend to buy this, here's a figure to write down. Remember, he bought it $40,000. The figure cash invested, counting the rehab money, down payment, and closing costs, is $29,820. Okay, that's that $17,000 rehab added to the $12,820 that he spent to buy it, down payment, and closing costs. Okay, you with me? All right, the rent is going to be $1,100, $1,100. All right, so we got the current rent. I know what my taxes and my insurance are. I got it on my spreadsheet. Okay, and I know what I did in this example. It was weird how I did things, but these are the actual numbers. All right, my tax is $58.44 a month, $58.44 a month, and my insurance is $58.44 a month also. Okay. What I do is take the rent of $1,100, I multiply it by 7% for repairs and capital expenditures. Each category is 7, 7, and the vacancies is 5%. So when I multiply CapEx by 7%, $77. Maintenance is also $77. Vacancies is $55. That totals up to, I'm holding 19% out for vacancies, repairs, and capital expenditures. The house has been rehabbed. Once they're done the rehab, the expectations are no repairs should be needed for a period of years or something very minor. So I don't use a higher percentage to hold out. I'm holding out 19%, 7, 7, and 5. Okay? All right, where are we at here? Property management charges 8%. So $1,100 rent, they will charge $88. Okay? So what we do is, to calculate the cash flow, we take the rent coming in, the money coming in rent, $1,100. We subtract the number I gave you for taxes, the number I gave you for insurance, $58.44, the number I gave you for vacancies, repairs, and capital expenditures, $77.55, the number I gave you for property management expense, $88, and the principal and interest on the mortgage, this is my final number, is $164.52. Okay, so I would subtract the principal and interest, the taxes and the insurance, and vacancies, repairs, and capital expenditures, and property management fee, and that should be everything. And that would give me my positive cash flow. Okay, positive cash flow, you might be calculating this. So I don't know if you want to wait to the end to calculate it, but you can write my answer down and double check it with your numbers. Positive cash flow works out in this example to $521.60. $521.60. All right. How I figure up cash on cash, because more important than positive cash flow is cash on cash. Okay. So the way I'm calculating this is, I got a rough voice today for some reason. The way I'm calculating this is, I take all the money down when I bought it and add to it the money I'm spending on rehab. That's how I'm doing this, okay? That total figure is $29,820, okay? So what I did, I take the positive cash flow that I get in, $521.60. I multiply that by 12 to get an annual figure. When I multiply it by 12, and I do it with a spreadsheet, but I wrote it down on paper here. When I multiply it by 12, that comes out to $6,259.20. $6,259.20. That's the amount of money I get in a year. Positive cash flow. Positive cash flow. After all expenses. I divide that number by the money I've spent out of pocket, which is, this is for my buddy, which is the money down when he bought it plus that $17,000. We came up with that figure of $29,820. So divide positive cash flow for a year, $6,259.20, by $29,820, and you come up with 20.99% cash on cash return. Another way of saying it is 20.99% yield, an annual yield. Another way to say it is you have about a 21% yield. You have about a 21% cash on cash return. So you tell me, is this a good deal? Is it a good deal for my buddy to spend the $17,000 to rehab it? There's a couple ways to look at it. Does he have $17,000 right now? You got to look, if you're in this situation, you got to evaluate that. No matter if you think it's a good deal or not a good deal, do you have that $17,000? Can you get that $17,000? Okay. Another way, some people look at it this way too. Some people will say, well, if I'm making $521 in positive cash flow, how long will it take me to recoup my money I've spent out of pocket? And we can say that's $17,000 or that $29,000 one. $521 a month positive cash flow from day one, to me, is a pretty good deal. Okay, it's a pretty good deal. And if I want to look at recouping my money, if we multiply 521 by 10, that's $5,216. Add 2 more months to it, we got another, what did you say, 5,000, 6,000, we'll say $6,000 a year. If positive cash flow, I just figured this out, $6,259 a year. If 3 years goes by, our positive cash flow is $18,000, probably $700 something. That's recouping the rehab cost. So it takes approximately 3 years to recoup the rehab cost. Okay, but the way I look at it, and I don't know, every market is different. Okay, every investor has different criteria. My criteria for my rental properties, I usually say when I buy a house, I want to get at least 12 to 15% cash on cash return. Usually I say that. I didn't always do that in the past, but that's my criteria now. I may deviate from that at times, depends on everything, but that's my criteria. I don't want 6%, I don't want 8%, I don't want 10%. Not saying I won't accept a 10% deal if I can't find anything else, but I want that 12 to 15%. I have properties that are now returning 20%, 25%, 25%, 41%, 36%, 40%, 37%, 32, 34, 37, 48, 38, and so on. That's why I'm financially independent with just 20-some properties, okay? Because I get good returns. So with very little money down. So for my buddy, if you watch this, you asked for my advice. I just gave it to you. I think it's a killer deal for you. I really do. If you want to sell it to me, I'll buy it. I'll buy it from you and I will pay for the rehab and I'll take this deal. It works for me. If it works for me, it should work for you, buddy. So with that being said, what do you think? Did you learn anything from this video? Do you better understand how to run the numbers? You can do it on paper. You can do it yourself, pen and pencil. It's easy. Get a spreadsheet. Email me. I think. Email is always in my description. You can always email me about anything. I think I got a blank spreadsheet I can send you. If I don't, I'll figure it out. I can send you one. All right? Maybe I'll charge you for it, though. But send me an email and I'll let you know. All right. So have a great day. Take care. Stay safe in all you do. Mazske signing out.